All right, today we are diving into an absolute classic, a book that's basically required reading for anyone serious about the markets. Market Wizards. It's this incredible collection of interviews with some of the greatest traders of all time. And it kicks off by asking one of the most fundamental questions there is. For the longest time, this was the big debate. People would look at these titans of trading and just assume they had some kind of superpower, right? Some magical, innate talent that you either had or you didn't. But what if that was all wrong? Well, a legendary trader named Richard Dennis was so tired of having this exact argument with his business partner, he basically said, you know what? Let's settle this thing for good. And he decided to run a little experiment. And oh boy, did he settle it. Dennis put out an ad and hired a group of total rookies. We're talking people with zero trading experience. He taught them his specific set of rules, gave them his own money to trade, and then just let them go. The results? They became known as the Turtles, and they made hundreds of millions of dollars. It was definitive proof that trading greatness isn't born, it can be made. Okay, so it can be learned, but that does not mean it's easy. In fact, when you read the stories of all these different wizards, you find out pretty quickly that every single one of them paid a steep price for admission, and their starting point was, not glamorous. Just listen to this. This is from Michael Marcus, a guy who eventually turned a $30,000 account into $80 million. But how did he start? By borrowing money from everyone he knew, his mom, his brother, his girlfriend, and then promptly losing every single dime, again and again and again. And the weapon that caused all this carnage was almost always the same: leverage. Leverage is what lets you control a huge amount of stock or corn or whatever with just a little bit of your own cash. It's awesome when you're right, but it's a brutal two-edged sword. For a beginner, it doesn't just amplify your mistakes. It turns them into account-destroying catastrophes in the blink of an eye. And this, right here, is the single biggest difference between those who make it and those who don't. The Wizards didn't succeed because they never failed. They succeeded because when they got wiped out, they didn't quit. They looked at those horrifying losses as the cost of their education. For them, blowing up an account, that was tuition. So, what exactly did that painful education teach them? Well, it's fascinating. Even though they all traded different things in totally different ways, they all ended up learning the exact same core lessons. We can call them the 3 sacred rules. And the path is so simple, but it's not easy. First, you have to master your risk. Second, you have to master yourself. And only then, third, can you find an edge that actually works for you. And that order is absolutely crucial. You can't skip a step. So let's start with number 1, the big one. The guy who wrote the book, Jack Schwager, tells this amazing story about his own moment of clarity. His big turning point wasn't some huge profitable trade. Nope, it was a loss. He got into a trade, it went against him, he followed his preset rule and got out for a small, manageable loss. Just moments later, the market completely fell off a cliff. That loss, which in the past would have destroyed him, actually saved him. That's when he got it. And this really lays out the difference perfectly, right? A novice gets into a losing trade and just hopes. They pray the market will turn around. A wizard? They already know exactly where they're getting out before they even get in. They plan to be wrong. For them, risk management isn't about being a genius predictor, it's about survival. It's about making sure you're still around to play the game tomorrow. How seriously do they take this? Well, check out this number, 3%. That was the absolute biggest loss from a peak that trader Marty Swartz ever had in his entire career. Just let that sink in. An almost superhuman level of discipline and risk control. This quote from the legendary Bruce Kovner just perfectly sets up the second rule: master yourself. See how it connects? Once you know you can survive being wrong, that a loss won't kill you, you're finally free to handle the psychological side of the game. Trading is all about resilience. It's about being able to get punched in the face, get back up, and make your next decision clearly, without your ego or your fear calling the shots. Trader William O'Neill had this brilliant analogy for this psychological flaw. He called it the turkey trap. The hunter sets a trap, and a bunch of turkeys wander in. But before he can spring it, a few wander out. He thinks, oh, I'll just wait for them to come back. But then more leave, and more. He can't accept a smaller win, so he just waits until there are no turkeys left at all.
His ego couldn't let go, and so he ended up with nothing.
And that brings us to the third rule. Find your edge. And this is where it all becomes about you. I mean, just look at this contrast. You've got Jim Rogers, a guy who would patiently wait for years for the perfect trade to set up. On the other hand, you have Marty Schwartz, who was so intense he tried to make money every single day. They were polar opposites, and yet both were unbelievably successful. The lesson here is huge. There's no one secret formula. You have to find a style that fits your personality like a glove. So what does it actually look like when a trader combines all three of these rules? When they manage their risk, they master their emotions, and they're operating with an edge that is perfect for them. Well, it looks like a kind of flow state, a true mastery of the craft. I mean, look at Paul Tudor Jones. There's a famous story where he was dead set convinced the market was about to crash. He had a massive short position on, but the market just wouldn't go down. It kept creeping up. So what did he do? He didn't argue, he didn't fight it. He put his ear to the tracks, listened to what the price was telling him, and flipped his entire position. He went from being hugely short to hugely long. That's a total absence of ego. So that's one kind of mastery, complete flexibility. But then you have the total opposite. From someone like Jim Rogers. He tells a story about holding a position that went horribly against him. Everyone was panicking, but his deep, fundamental research was still solid. So he just sat there with iron conviction, let the hysteria wash over him, and was eventually proven spectacularly right. So which is it, flexibility or conviction? A master knows when to use which. And when you can operate at that level, what are the results? Well, they look like this: 250,000%. That's the return that one of Ed Sycota's early clients got. They started with just $5,000. It's just a mind-boggling number, but it shows you what's possible when all these pieces click into place. So we've gone through the rules, we've seen these insane results, but the book leaves us with one final, much deeper lesson, and it comes from maybe the most brilliant and most eccentric wizard of them all. And it's not about charts or strategies. It's about a much more personal question. The quote comes from Ed Sykota, and when you first hear it, it makes no sense. Everybody gets what they want out of the market. I mean, come on. Nobody wants to lose their life savings. Do they? But Sycota's point is way more profound. He's saying the market doesn't give you what you say you want, it gives you what you subconsciously crave. So you have to ask yourself, do you truly want the quiet, disciplined, day in, day out process of winning? Or do you secretly want the drama, the heart-pounding excitement of a huge gamble, the thrill of being a hero, or even the tragic story of blowing up? The market will happily give you either one. And that is the ultimate lesson of the market wizards. In the end, trading wasn't about money for them. It was a vehicle for self-discovery. The market was just a giant, unforgiving mirror that showed them exactly who they were: their fears, their ego, their discipline, their character. The incredible profits, that was just a side effect, a consequence of winning the inner game first. And that's really the idea that I want to leave you with, because it applies to everything way beyond finance. These traders were just completely, ruthlessly committed to getting better day after day. Every mistake was a lesson, every loss was data. The real passion wasn't just trading, it was the process of mastery itself. So the final question really isn't about the markets, it's about us. What are you truly committed to?